gentlemen. It's Monday, the 20th of December, 2021. This is your host, Riri, welcoming you to another episode of A Little Late in Crypto. Yesterday, the Dpad panel covered a bunch of different crypto tools. We started out with CoinMarketCap, went over the basics, then went on to CoinGecko, which has a little bit better portfolio than CoinMarketCap. Then we took a look at BSC Scan and dug into some of the things that you can track on the scanner there. And then our audience favorite, the panel dug into the Fear and Greed Index. Today, we are going to talk all about market conditions. Now, I've been busy building today. I'm working on a whole bunch of different projects. So busy, I haven't even looked at the market. I guess I'm about to hear, how are the market conditions? Are we having another sad, bearish day today?
I think it had more to do with the couple of weeks we had seen so far in the December. Usually, the market used to have good bullish days in. If you just see previous years, you will be able to see in December, we used to have good number of bullish days rather than what we have seen so far, comparatively like a bearish days, and so far not very good days. If you just compare with the past, probably history is in making, or maybe market will just turn out to change and continue the same like December is for bulls. So 10 days remaining. Let's see what happens in the next 10 days. But yeah, in first 20 days, it seems bears have been mainly dominating in these 20 days so far till now.
So I heard about this. I heard about this December action recently. I went back and looked at the charts. And last year in December, it was almost a flat line from December 1 to December 16. And then you just see the mountain take off. And now, 4 years ago in December was when I started in crypto. And December 17th was an all-time high. I started that day. Oh, God, what a day to start. So then I've heard from one of these predictors that this cycle is approximately 9 days behind that cycle. So if that is the case, we might see a takeoff in another on the 25th. We'll see. We'll see if that predictor was right. Can't listen to them all.
So you're suggesting sort of a Christmas takeoff, Santa coming in and taking us up.
Come on, Santa, bring us the bulls.
Right. So I think it's no news that the markets have been in a constant sell-off, even if you just try to report the price or look at charts. I think it's been 16 days of grind after the major sell-off, and the charts, especially BTC, the main chart, it has been forming constant lower highs. And so this is just basic price reporting. This is what you can see on chart. I don't think it provides any kind of actionable insight or any alpha. I think yesterday we had a discussion on the Fear and Greed Index, and I don't think it makes you a genius or a great trader, trying to short at this point 33% below the highs at a Fear and Greed Index reading of 20s. I don't think taking a swing short leveraged position or taking a short position on the markets, except for a scalp, makes any sense right now. There are so in terms of probabilities, at any point you can simply, when you're crowded by thoughts and emotions, you can just sit out, try to be objective and analyze that what the market can do at this point, and try to sort of assign some mental probabilities to it. So at any point, the market can go up, down, or sideways, right? It's already down 33% from the highs. Fear and Greed Index and sentiment is one of the worst. People are bored to death. Traditional finance has taken an off. So and so here one of the probabilities is downtrend. So it could go from here to 30,000. Sure, it could. It came down from 69 to close to 45,000 is where we stand today, $45,000, and it could go straight from here to 30,000. But just try to assign a probability to that scenario, or it could bore us with another month of sideways price action, like in May to June, constantly forming lower highs, prices suppressed in the range. So that could also happen, or it could reverse from here. So out of the two probabilities, you'd want to either buy right here or buy close to the lows. And I think expecting a straight drop from here to 30,000 after a 33% drop from around 69K to 45K is kind of a low probability scenario. No, I'm not arguing it cannot happen. And obviously, at the end of the day, anything could happen. But that's the way I like to basically picture it and think about it. So either one could buy early and curse the markets and cry, or one could wait for some sort of a bullish outbreak and then ride the trend.
Well, right, because these trends don't last forever. That's why we have signals for looking for the reversals.
So I was looking at some data today. In a while, when I'm back on my desk, I'll try to even basically share my screen. But there's a tool called Coin Analyze, which is a $5 per month paid tool, and mostly it's a free tool. So what has happened is there's something called open interest. So for those of us who are listening this term for the first time, are YouTube viewers.
Uh-oh. I lost you.
Position or a short position. So open interest is simply the total value of open positions in the market. So when on I think 8th December, when this crash happened, when BTC went down to 42K, even 41,200 or 41,300 on Bybit, this open interest was decimated. Obviously, all stops were taken, all coin margined or USDT margined contracts, they were liquidated. Anybody with leverage of more than 3x and somebody who probably even conservatively got in at around 56,000, price dripped down to 40,000. Most of them were liquidated. The open interest came down from around $21 billion to $13 billion. Now, a lot of that open interest has again recovered in the last 16 days, especially on Binance. So all I can say looking at open interest is there is sort of a move brewing. People have again started aggressively getting into positions and are positioned for some sort of a trend, some sort of a direction. It could either be up or it could either be down, but in the recent days, the price has been falling and the open interest has been increasing. So this suggests that a lot of people are furiously rage shorting here. They are shorting. They expect the market to go down and they expect it to go to shit. So they are furiously shorting, and probably earlier they got stopped out or liquidated on their logs, and they are just simply angry at the market, and they in some way or the other want to get back at the market. So they don't want to make the mistake of taking a long position again. So maybe that could also be one of the reasons. So all I can say is I think the pressure is on. Something is brewing. So soon, I think the pot is on, the pan is on, and pressure is being built in the cooker. So soon we will see some sort of a whistle or some sort of an explosion in one direction.
So who's got a daily routine for checking market conditions?
Even daily is too big a time frame. I think I do it numerous times a day.
Check it numerous times a day. So one of the audience members once says, how do you analyze the crypto market? So
I think there are different ways to do it depending on what kind of instruments you trade and what your eventual goal is. For somebody like me who trades on leverage, I think it becomes all the more important to analyze market and to adopt some sort of paid tools and to look into data deeply. If you're a spot buyer, you can basically and spot buyer of a meme coin, you can basically remain chill, expecting or wishing that someday again Elon will tweet about your coin and it will still catch up momentum. So not much of a technical analysis or thesis is needed. But when you are trading leverage and when you are trying to manage your risk actively and trying to basically get a asymmetric risk reward position, see the basic function of what you call TA is to provide you with an asymmetric risk and reward setup. It is to basically help you derive some numbers where you can define your risk and reward. And if your reward is greater than your risk, the setup becomes actionable and you can take it. And then you have some sort of a mental probability as to that again comes with a lot of experience as to what the outcome would be. Will this be a successful trade or will this be a failed trade? Failure is a inevitable part of trading, right? So you can again look to a lot of data. Recently, open interest and funding data. I think that these two data points are quite reliable while analyzing crypto markets, especially Bitcoin. And basically, all these altcoins I try to oversimplify. Currently, with the exception of Luna and YFI, you would hardly see trend in any of the other altcoins. So a sustained trend in any of the other altcoins, right? So these altcoins are mainly higher beta or high volatility. They are higher beta of Bitcoin. So when Bitcoin goes up, they go up slightly more. And when Bitcoin goes down, vice versa, they go down slightly more. So I think it is very important to uh, uh, have on your fingertips or have a pulse about the market, about the general trend of Bitcoin. And one of the ways to do that is, along with price, look at open interest and funding. Obviously, you can look at MAs, you can look at trend following indicators like Ichimoku, you can look at chart patterns. So I think it's something personal, a trading system, or as to how one analyzes the market. But if somebody who is just a beginner, I'd advise them to look at moving averages. So suppose there is a 20 period moving average, there's a 50 period, there's a 100 period. If the shorter period moving average, say 20 is above 50 and 50 is above 100. So on whatever time frame you're looking at the market, this indicates a uptrend, obviously, because moving average line of a 20 period, a recent moving average is above higher time frame one. So in the recent times, whatever market you're looking at, it's trending up. And if the reverse happen, it's trending down. Same goes for EMAs, exponential moving averages. Now, the simple difference between moving average and exponential moving averages, exponential moving averages give more weightage to recent price action. So EMA 20 is an average of, on a daily time frame, is an average of 20 candles, simple average. On an exponential average, moving average, it will give more weightage, exponentially more weightage to the recent candles, recent 10 days price action. So people also use a MA-EMA strategy. Suppose a 7-day EMA is above a 7-day MA. Now 7-day EMA indicates more recent price action. So the price is bullish, and the trend is becoming more and more bullish. It's exponentially increasing. So I think one of the simple ways to look at trend is moving averages. Then you can basically add more indicators depending upon your stack and what kind of data you want to look at.
So so you'd add the Bollinger Bands to keep track of the moving average, or what would you add?
So Bollinger Bands is also, I think, a very simple and effective strategy for somebody who is trading spot, is just trading in the spot market and is getting started. Bollinger Bands is a statistical derivation. Bollinger Bands are basically three bands. I think it's being shown here in the image. So there's a upper band, there's a lower band and in the middle there's a midline, which is typically a 20 period moving average. So yeah, BB20 close to zero. So yeah, the orange line or the midline is a 20 period moving average. There is a upper band, there is a lower band. Now what this tells you is it's a statistical based approach. So say if the prices were to be plotted on a bell curve, if the price were to be plotted, or forget about price for a matter, for a minute. Say if the height, how tall people are in a specific region across the world is plotted. So there would be a bell curve where there would be a midpoint which would be close to say 5.5 feet, and maximum number of people would be around 5.5 feet. There would be very few people below 5 feet. There would be very few people above 6 feet. So you could say 6 feet is the upper band, 5 feet is the lower band, 5.5 feet is the midline. Statistically, you expect more than 60%, 50% people to be around 5.5 feet, and less people to be above 6 feet, and less people to be below 5 feet, say in an Asian country for that matter. So your 6 feet becomes the upper band, your 5 feet becomes the lower band. Once you plot it on a bell curve, you get a sort of a bell normal curve distribution, is what it is called. It's basic statistics. So there is a mean and there are standard deviations. So the upper band is simply mean plus 2 standard deviations, mean plus 2 sigma. Lower band is mean minus 2 sigma. So what Bollinger Band actually tells you is 95% of the time, the price or whatever price is being traded, and the band is being derived from the price live. So 95% of the time, you expect the price to stay within the band. So if on any time frame, you'd see very few data points outside the Bollinger Band. The Bollinger Band encompasses the price from top to bottom. So if the price is outside the band, it's a rare case, it's a 5% anomaly. So if the price is outside the band on a very high time frame, then you can probably even decide to sell it. Now, all of it applies on context. Bollinger Band is also used in two ways. So on a 5-minute Bollinger Band, if the price is touching the upper band, it can be the beginning of a trend.
It could be the beginning of a trend.
Yeah. So initially, when the price starts touching the upper band, it's called straddling of the band. And initially, for the first time, when the price touches the lower band and it starts walking along the band. Yeah.
So in October here, when it's down here below the moving average, and then it starts to right here.
Exactly. So right here, the price is walking along the band. It is pushing the band further. So it is straddling the band. This is the beginning of a trend.
Okay.
So a new trend has begun, and a new trend has played out up to 60,000, and then the price comes back, tries to make a move towards the lower band, but again reverses and tries to break out of the upper band, gets rejected. So on the second rejection, you can probably assume a trend change. You can be cautious about a trend change, and when that happened, the price came down. It broke market structure. It broke the previous higher low. It formed a lower high, and then it started straddling along the lower band. Basically, it's walking along the lower band. So this has also been a trend. It's been a downtrend. So as a trader, you basically need trends, and you ideally, although I find it very difficult, be agnostic to trends. For you, a downtrend is as good as an uptrend. Downtrend is also still a trend, right?
Right?
Uh,
Well, yes, and
where
the
you can,
downtrends are the ones that you watch for if you want to DCA down, buy your favorite fundamentals, that kind of thing.
you can either choose to DCA down, or if you're basically trading on margin, you can even choose to basically sell high and buy low, or short selling. I think that doesn't come naturally to many people, and it's more riskier than buying.
Yeah.
So I would also not advise it,
That's
because
not for beginners.
that's not for beginners. Plus, theoretically, on a short position, you can have infinite loss, because there is no limit as to how much the market can go up, and market can go down only till zero, right? It cannot go negative unless it's crude oil. It cannot go to below zero.
Yeah, we never
So
thought we'd see that, did we? And then last year, crude oil proved us all
exactly,
wrong.
exactly,
What a
and
day
even
that
today,
was.
crude oil has again started its downtrend. So it's on the verge of a breakdown. Crude oil.
Good.
I think that was not the last year. I think it was like 2019, I guess. So in that year, that futures
Even in
of
2020, it happened. Uh,
oh
even it, yeah. So there was a CFD, contracts for
yeah,
difference.
2020, yeah, 2020 itself, yeah,
Yeah,
but
yeah.
not 2021. Yeah, it's almost the end of the year of 2021. So yeah.
So
So
one
in
and a half year.
2020, I think the oil prices were in the negative for like it was given warning a day before as well. But yeah, for a day, for the closing day of all those futures trade where people can bet on the future prices of the oil for like next month or the next to next month. But it was mainly for the particularly that month future contract was expiring, and due to that, it went down in the negative. And due to the storage capacity limitations from the brokers they trade, and due to that it happened. But it was not like that. It You could actually buy it at negative prices and you could get free oil plus free money. But it was not like that. It's just a misconception in normal people's mind that, oh, oil is like you get free oil plus free money. No, it was just for a particular contract, especially happening in the contract which was expiring, and the price was pretty low in the next month's contract as well. But after 3 months contract, it was completely normal. It was just like 5% down or nothing else, nothing more than that. So since I was on the screen in such a setup where I was completely tracking the price movements across different markets, so yeah, I know that scenario, and that happened only on that particular contract, nothing more than that. So it might seem like, oh, while like what I just said, that people will think I get free money plus while, which is like almost I can sell it later. But yeah, it's what specifically for that particular kind of community who can actually take position on, say, exchanges like CME, that can only take benefit of that. And eventually, if even if you are a broker, even if you are a trader there, you should have a license to store it. So it was physical. I mean, physically, you need to have a storage of that oil. You can store it, and that was the just crisis of the storage of oil that led it to negative pricing of that oil in the I mean oil markets in that particular month, especially for the futures. But in retail, in say 3 months from that particular month, everything was normal. It's nothing like the anything happening, and it's trading is happening under like zero or something like that. So it was just kind of, you just say it as a glitch which happened on coin market cap just few days ago, where you could see a billions of dollars of valuation of every other coin. But yeah, it was not real at all. So
We've got
similarly,
another. Oh, sorry.
yeah,
Yeah,
it
no,
was just a kind of,
that
yeah,
coin market cap thing was something else, and they're trolling everybody. How's it feel to be a trillionaire?
yeah.
We've got an audience member asking, and this kind of leads into that. How can crypto prices be protected from social media hype?
I think the market is still in the I think pretty. It still has a lot of room to grow. So possibly as of now, we have seen such influencer influencing the complete crypto market, and we have seen it multiple instances from like whatever we have our journey so far. So we can see the Elon Musk anytime it can influence market, and it's not like that it happened only one time or two time. Anytime he tweets or he does try to interact with any crypto, he just type it or he just do it in say joke, but it impacts market.
Well,
So
and social media is one of the big three ways to drive traffic for your crypto project. I mean, it's social media, PRs, and and influencers.
yes.
Social media is a necessary evil. And it sure helps us pass around the market sentiment. Welcome to all of our new listeners today. We're talking all about market sentiment today, going over coin market cap. We talked a lot about the fear and greed index yesterday, and we are taking any of your questions. If you have them, please do write them in the comment section. Should developing countries adopt cryptocurrency as legal tender? How do you guys, what do you guys think about countries starting to do that? And how does that affect the overall market sentiment?
I think regulations, and I think the first nation was like EI Salvador, but El Salvador, but it's not like they are very big country or something which can definitely impact the whole market. But yeah, it helps that at least someone is thinking around that, someone is trying to legalize it, someone is trying to regulate it. So it's a good for the market. It's nothing bad. And if you just keep hearing FMC meetings, and if you keep reading, like, see, I just typed let me just type FOMC, so you will be able to know that FOMC meeting, it's a interested decision meeting being held every 45 days by the biggest central bank of the world. So if you just go to their website, the I think Federal Reserve Board is the they keep telling about it every meeting. So there will be one column definitely for which will be about digital, I mean digital cryptocurrencies or anything. They would definitely mention it about every for I mean 45 days they are discussing about it. So they will just mention it. It's not like they are not thinking about it. They have in their plan, they are trying to regularize it. They always discuss about it. But yeah, somehow it will take a lot of longer time. I personally believe that just regulating it is not feasible at this moment, and just banning it is not a solution. So a midway and properly designing a completely anonymous or autonomous body, it's not feasible at this moment, unless until they understand the technology very very good. They won't be able to like find how can uh, how can we better manage it. So before doing that, they will prefer to understand it a bit more, and even though they are knowing it, they can just manipulate it, and they can print more money rather than the regular just by regulating it or something like that. So probably they are just enjoying the market as being, if one will start being regulated, they will have a little limited scope of those pumpamentals, pumps and dumps. So this cannot be like easy money for them to just give an announcement and just pump it. So it won't be easy money for them. So they will probably let it grow big, in my opinion, and after some time they will pick it up. Oh, now it's time to regulate it. Now it's a bigger market. Now let's come and bring some solutions so that we can just bring the prices into our control and try to bring in the under our control. As of now, let it grow continuously, and once we feel like yeah, it has grown enough and our assets which we are holding from say 7 years or 5 years or 4 years, have now very strong, I mean, backup. Now we have a strong reserve of Bitcoin. So at that time, they will probably start regulating it. And then we will see, I mean, either good pump or just a stable market, which will be like kind of forex market, which we have seen not too much of movements, but yeah, a static, continuously slow up downs, properly movements or something like that. It will not be exactly like 5x or 10x in a single day. Definitely that regulation will impact the growth we see right now, but that will be good because we will have good liquidity at that time.
So we keep talking about different projects and how to invest in them. The audience all wants to know what your favorite projects are for growth in 2022. What are some good ones to watch?
So I would at this moment I would just say just wait a bit more and wait for the, I think after few days we will probably have some kind of direction, definitely, because in 20 days we have seen, I think, let me just try showing something here on the screen. I'm not very good at like drawing charts, so probably, I
I
mean,
turned the highlighter on by accident. I completely understand. All right.
so if you just see from here, if one would simply follow those simple indicators, which is just AMA 25, and 29, once it started going down, and even at when let me just these indicators MA7, MA25, MA99, which is by default, it comes with the Bitcoin chart, like I mean on any Binance chart. So whenever you just see the 7-day closing started, it was like, I think it is MA25.
So that's such
And
basic information. Binance feels that you just every trader needs to have that. You should never use
yeah,
that as an indicator on its own per se, but like that's a good benchmark.
yeah, sorry, MS7, you can see the 7-day moving average. So it's like 25 MA, and this is like 99 days AMA. I mean MA. So once you start seeing like MS7 is below MA25, it's kind of a not very good signal to sell. But yeah, few people just start trading on the basis of that, and even eventually you will find that's a kind of good short term trade or even long term trade. As of now, it has not crossed it, but now if you just see, the MA7 is at the below and MA25 is just in between, and MA99 is just above. So now we what we could see, we have seen so much of balance here that it's kind of acting as, it's going back to here, again coming back, again going back, again coming back. So it's now acting as a support as well. I don't know how people call it in like maybe triangle or something. They will have different opinions, probably matching with any other, say Fibonacci or any other instrument, any other indicators. But what I generally see, that if it comes keeps starting pumping from here, you could probably acting this MA7 as a support and MA25 as just resistance, and probably after few days you will see they both are combining here somewhere here, and after that it will act as both are acting as a support. Now MS7 will be over MA25, and then it keeps going up. So this is just one scenario. Other scenario just keep going down here, it will keep broadening up, and after a few days it will eventually from somewhere like a little bit more down, there you can probably go up. So even in the past, if you just see here, MA7 is just MA99, and say MA7 is just going above say MA25. So now you can see just basis on that, you can probably long it here. You keep seeing it MA, if MA now 7 is going above MA99, so even a strong indication, and it's keep going up, keep going up, keep going up. And once you see this MA7 and MA25 is now closing, and it's very close, it's a good sell signal. So probably you here you can see a good accumulation of all three in a near region. So probably a good short closing, again a good long opportunity. So what I will look here, I will wait for 4 or 5 days to print more, because it will be some kind of triangle here, some kind of support here. I will probably wait for some AMA convergence here, and after that, once AMA start acting as support, it will probably a good long. So just basis on the simple chart and just visualizing it, it's nothing, I think more of a rocket science. But yeah, definitely when you start adding those indicators, you will probably have more accurate data from where you could see a bounce back in terms of number, in terms of everything. But I don't do a day trading, so yeah, it doesn't impact me. I see completely like 7 day picture or 15-day picture. So I will probably wait for a few days. If it keeps going down, probably it will be like somewhere from, if you just see a little bit support will be here, somewhere here. So probably around 50,000. It's just a kind of psychological uh, support as well. If we start holding there, we could see a bounce from here. Definitely we will see a bounce, but yeah, it depends. So at that time we could probably buy again a dip. So for just for spot, if you are not in like completely in altcoins, you might see sharp decline. 10% decline in BTC is equivalent to 20 to 25%, or even 30% more decline in other altcoins. So I will probably wait for a bit, and probably after once MA25 is below MA7, then probably I will start looking for adding more position and more position, or even more scalping, because that will be that will bring more confidence into my trade, and probably that will be a bigger setup rather than looking for a small pump and dump and probably doing a scalp trade. So for a scalper, yeah, you need to have Fibonacci. You need to see all those charts streaming down, like from uh, 1 day. You can probably go to 1 hour time frame and start looking at, oh, from where it is a good support. So probably from here it's bouncing back. If you just see, it was 1 day chart. Now if I start looking at 1 hour chart, I will have a different view. Again, simply if I say that MA7 is going above MA25, so just I can long it here, and distance is going closer. So I will wait for the reaction. If our stop is below somewhere a previous candle low, I think we can stop it, like make a stop here, somewhere here. We are good to go here. Again, we see a good bounce is happening. Once we see MA90 9 is around MA7. So here we can close this, close this long we have opened. We are not opening the short, I mean to say, but yeah, somewhere once you see that we are getting rejected, you can probably sort from here once we have some confirmation somewhere here. So probably at that time you could probably wait for short. And right now we have not seen the short recovery, but somewhere here, if you see from other angle, it will act as a support. So probably we can see a good bounce. If not, if the market is like keeps going down, then probably it depends on like how well you are managed, and are you prepared for the downtrend, and are you prepared for the upside. So if you have stops in your mind, you are good to go in any, I think, even short period. But yeah, short period is a bit more risky, because you will see a quick week because of some, say, XYZ announcement, and it will make your moves a bit, I mean, they will just wash you. So yeah, I think I'm done here.
So be careful. That was a very nice presentation. So when I was researching the Bollinger Bands and the different moving averages in March, and I was looking at traditional markets, they focus on the 50-day and the 200-day. And now watching your presentation, I see that they're doing a 7-day and a 99. Is that kind of to replace the 50 and the 200 because crypto is
It's
so lightning
nothing.
fast?
It depends on like person to person. So it's a trading. If you just see, there are two kinds of traders. If you say the fundamental believers, so they will have their kind of fundamental analysis. So I do fundamental analysis a lot more than technical analysis. But there is just third, like I mean second, who believes in technical analysis. They doesn't care about what is in the fundamental with the coin. So they know if the coin has pumped 25%, let's sort it, it will come down. So they are even right. So they don't know the reason behind the pump. They don't know about the fundamental, what happened, what the news came, what is the reason behind so much of pump. But yeah, they would like to sort it just. And whenever they see 20% drop, they will just keep buying it. So they don't know why the hell it went down, what was the reason behind such shorts, what was the reason behind uh, so much of negative, so much anything. But yeah, they will just see a good kind of opportunity to buy, so they will buy. Whenever they see a good bounce has happened, they will know, okay, now at least it will drop a little bit, so I will just scalp it. So it depends on person to person again. If you want to be a very good position and probably I mean to hold it for few days, few months, you need to definitely wait for multiple indicators, pattern, multiple things to better, and strongly you need to know a bit more about fundamentals. Even if you are a technical analysis expert and you try to believe uh, more on the indicators rather than being on the fundamental side, so even that is okay. But you definitely need to know a bit if you want to make a position for say 15 to 30 days. You don't know about like the BTC price action. You don't, if you don't know about the what's happening in the crypto, you will probably be more prone to hit your stop loss rather than being hitted your targets.
That's a nice way of saying getting wrecked. Prone to hit your stop loss.
I think another sure short way of getting wrecked is trading your emotions, basically. You see that the market hasn't done anything in the past 16, 18 days, been falling money. You simply start rage shorting it just out of spite, just out of anger. I think that also is one of the sure short ways to get wrecked. Instead, I think a lot of data points here suggest that yeah. So even the lowest of IQ guys can see trend, and you don't basically need to uh, be smart in front of a trend. You don't need to. Nobody wants to catch pennies in front of a steamroller. That's what you do when you're trading against the trend. You're trying to basically pick up a penny in front of a steamroller. A trend moves like a steamroller, and it will crush you with all its might. So yeah, the trend as per 7-day MA has been downwards, but one of the things which we are ignoring here is there's already been a very deep wick down to 42K, resulting in a lot of open interest being closed out, or around $10 billion worth of positions were wiped out on the 8th, I think. That has already happened. So if you're on the 4th December, I keep mistaking it as 8th December, sorry. So on the 4th December, when these even coin margin contracts, they went deeper. Bybit went to 41,274. So when that ugly wick happened, it cleaned out of a lot of speculators, a lot of positions. And here, what we see is, I would share my screen and show you.
That will be great. We would love to see your screen and probably your indicators or charts.
So there's nothing much on my screen right now. But yeah, I'll try not to confuse everybody with too much of data. Just very simple basics. So here, I think Now, is everybody able to see it?
At least I can. So probably
yes.
everybody would be able.
Yeah. So this is a free tool, Coin Analyze. So what happened is, this is a 6-hour chart. This is a 6-hour chart. So something similar played out on 7th September when you saw a very ugly candle, probably one of the ugliest daily candles. It was a $10,000 candle.
That was the day that El Salvador. So people were selling the news.
Yeah. So those kind of narratives build up to have a logical explanation as to what happened.
And the president bought the dip.
Yeah, El Salvador bought the drip. So from 50 to 900, we saw within 24 hours in a single day, 40 to 800. It was a $10,000 down candle, and a lot of these open interest on coin margin and stable coin margin contracts, this got wiped out. Now, this is the business of exchanges, the market makers. When you're trading, when you're speculating, you don't care about the buy-sell spread. You simply market in and punt a long position. So the market maker automatically, somebody has to take the other side of your trade and keep the market balanced. So market makers eventually end up building position against the retail traders. And a lot of these exchanges themselves are market making on their own platform. So Binance would eventually end up having a position which is basically net reverse of whatever the crowds or the masses are doing. So even they need to get their bread, they need to get their money, and they are patient in doing that. They let the pot boil. This is the pot below. Aggregated open interest on stable margin contracts, coin margin contracts, and then they quickly wash it. They do a quick wash. And it's an unregulated market, and basically nobody can do anything against it. And this is similarly, this is what happened on 4th. So there was a dip. There was a dip from 69, but people weren't shying away. Market open interest was at all-time highs. And you could see in these brief moments, people were still aggressively buying around 60,000. And again, people were aggressively adding. When it went from 53 to 58, 59 over here, people were aggressively adding. People weren't giving up. And so here comes the day. Now, on 7th September, we saw a $10,000 daily candle. On this day, I think this is the worst in BTC's history till date. BTC has a 10-year history. And I think never have we ever seen previously a $15,000 candle from 57,000 to 41,000. But in this process, you see a lot of this open interest was wiped out. So coin margin contract is where people are fronting, where people are putting their own Bitcoin as collateral to buy more Bitcoin. So they are more vulnerable to be taken out. Because when the price moves against them, there is something called convexity, which acts against them. They are more easily liquidated, right? So a lot of open interest in coin margin dropped sharply. Even a lot of open interest in stable coin margin contracts dropped sharply. Now, ever since that day, from 4th December, today it's 20th December, 16 days of boring price action with a high, lower high, lower high, lower high, lower high. That's what it has been. It has swept the lows, and today it again looks ready to sweep these lows at 45,400. Very soon, it's already at 45,500. I think before we end this stream, we could see a sweep of these lows. So that's what it's about to do. So this is happening, but while this is happening, something interesting is happening over here. These stable coin margin contracts, you can see they have been aggressive, and they are been aggressively opening positions. Now, these are the guys, mind you, who have their trading account in USDT. They are not holding any crypto of any sort. They are just holding USDT. So first of all, they are already assumed to be bearish because there is a facility where you could have the cake and eat it too. You could have basically bought BTC, and if you're too bullish, you could have long BTC using BTC as your own margin. But these guys choose to keep majority of their portfolio in USDT, which also makes sense. I am not arguing against that. And they are aggressively opening positions. Now, there is another indicator which tells you the long to short ratio. For some reason, I think this indicator is not working right now, but if anyone else could load it on their screen, they'll see that long to short ratio around here was 5, and it has come down from 5 to 2.5 currently. So there are more shorts opening than longs, and those shorts are opening in this USDT margin contract, so they are more vulnerable to be taken out. And this open interest has already reached 3rd December levels, pre-crash levels. So something is brewing over here. I'm not saying all of this will get instantly reversed in one candle, but yeah.
Something's brewing.
Yeah, that's what I'm saying, that something's brewing and something interesting is about to happen. Very soon we'll see these lows taken out. It's just a matter of time. So these all stop losses, they are about to get hunted. And once they get hunted, it's difficult to comment on how deep it could go. So, but there is definitely a reversal on the cards, is what I'm saying, and I have my reasons for it. So you could see something like this, even this low being taken out, and then a reversal happening till say over here, or another one of possible scenarios is you could just simply sweep these lows and not go this deep, and then see one of these reversals happening. And 52,000-53,000 remains the sweet spot as to till where you can expect this kind of price action to reverse.
I see by your drawings, though, the deeper we go, the more volatile it gets, and the higher we go. Like, let's go deep. Like, come on. Don't be scared, everyone. It's okay.
See, that's
how we get the $500,000 Bitcoin, is to go real deep in December.
So market, the momentum is born out of compression. It doesn't come. There are reasons why you see trends or you see such aggressive momentum. So the big players were, I think, positioned and had sold a lot of what they were holding around here. And this is where retail started getting aggressive. And the market showed its hand by forming lower highs and lower lows and lower highs and lower lows. The market was going deeper and people were becoming more aggressive. So this was a brutal wipeout, a washout. It was a single day $15,000 candle, a 30% down candle on one day, imagine.
Yes, our chat was very, very busy that day. There were people in there with war stories. There were people in there singing Kumbaya and holding each other's hands. I mean, it was real.
Right. I'm sure it was painful for many people, including...
We have a lot of newbies in our project because we have strong fundamentals. So they hear about us, like, oh, don't like BTC, we're too late. Doge, we don't want because it's a meme coin. Well, you look pretty good. Let's go with you. We had some upset people. Their first crypto venture, we had a 30% drop of the day, and they're like, oh, are we going to be all right? Just relax. It's normal. Get on the roller coaster.
So markets are meant to play with your emotions. That's how they are. And from here also, since 4th December also, there's been nothing bullish technically. As far as the facts are concerned, lower high, then another lower high, then another lower high, then another lower high. And it's quickly about to sweep this liquidity. So these are stop losses. So the market is about to eat or pierce through them very soon. It's almost a certainty as we speak. I think by the time we end the stream, we could see a sweep over here. Now it remains to be seen and remains to be said as to how deep it goes. It would be really ugly and brutal, and honestly, I'd like to also acknowledge that even I'm not positioned if this happens, because this is a low probability scenario in my book that it goes straight down from here to here. If this happens, I think even if this happens, or even if not this, if we go straight down to this and we sweep these lows, I think a lot of people, including me, I'd like to publicly admit that I'd personally be wrecked if this happens.
You personally what if that happens?
if this scenario plays out, if it goes straight down to say 25,000-26,000 from here,
Uh-huh.
a lot of people, including me, would get wrecked.
Oh.
Trying to say, I'd obviously, when I see this happening, I'll try to manage my risk and salvage the remaining of my account. But yeah, I'd take a deep hit, I'd take a big hit, and so would many other people. So this again remains a low probability scenario in my book. There needs to be some exceptional trigger for this kind of sell-off to happen. I'm sort of expecting a reversal now. There are some well-established reasons for that. Although the CVD shows that there has been heavy selling, and you see that in the price. CVD is basically related to price. It shows you what's happening net buying or selling. So there has been heavy selling across coin, margin, stable, and even spot. So all of them have been selling, and that's what's been happening. The price is going down, but at some point in time, you expect the price to reverse, and those reversals happen when enough market participants have been taken out. So somebody like I can bet that you can see a short-term reversal when these stops get taken out. So a lot of liquidity. You can assume that here there would be, say, I'm just giving an example. The actual number might be much larger. There would be 100 million worth of stop orders. Those stop orders are sell orders. So somebody who's in a long position has basically punched an order to the exchange that if the price goes below 45,375, which is the current low after this, I don't want to remain in a long position, so sell it. So that decent chap is being sincere and is managing his risk, and there are exchanges and there are whales and there are other market makers out there to basically take advantage of his fears or take advantage of the liquidity which he has provided in the form of a stop loss order over here. So what the price will do is price will deliberately take out this low. This is what you call swing failure pattern. It will deliberately take out this low, and once this low gets taken out, there are bigger players who get to buy a lot of Bitcoin at cheaper, favorable, which otherwise nobody would sell it to them, and then reverse the price. They'll try to, for a short term, reverse the price back into this range. So you can expect a reversal even or lower time frame once these lows get taken out, because that's how market behaves. Once a lot of liquidity is taken out, once say 100 million worth of Bitcoin has been bought here by some strong hand, he'll try to push the price up and try to offload it higher. That is why you see these micro reversals after these key lows or key structures are hit. Once you see, and that's when people get emotional and start thinking that their trade was right. Their stop loss got hit, but their trade was still right. So I think either ways, once this low liquidity gets hunted, you'll see the price reversing back into the range, dancing over here, taking some of the stop losses of these shorts out here, even till here, and then probably continuing back down if it wants to. So this is one of the probable scenarios. This is why you see such extended moves. The only reason why price moves to extremes such as say 45,375 or 52,000 for that matter is sellers have their invalidation and stop loss over here, buyers have their invalidation and stop loss over here, and bigger players want to basically bamboozle and have fun with both and take both of their money. And that's what you can see Bitcoin doing on every time frame. So the market was to fall, but the market took out 67,000, went up till 69. There was liquidity. Anybody who had sold, he could have a stop loss at an all-time high. Anybody who was bearish and was expecting market to fall and might have sold at 62,000 or again might have sold at 63,000 after the market dip. So you thought, oh, I was right. Bitcoin got rejected from 67. Let me short the fuck out of it. And you did. And market bamboozled you by going to 69,000. And this was the logical place where you had your stop loss. It took you out. And then again, it went down. It continued down. So something similar is what I'm expecting to see here. It might go down, bamboozle you, and then continue to go up and basically hit the sellers who are confident in their position.
It's a fake out, right?
Fake out on both sides. So I think one of the things to learn is, as a trader, is one of the most important things which has helped me also is ABC. Always be closing. It's the first rule of trading. So suppose you successfully sold here, you are in a position, just put an order to buy below 45,375 or even close your short here. Suppose you enter below 45,375 after listening to this stream, try to close around 52,000 or even 49,000 or 48,500. These are the first, second, third trouble areas for a buy trade. So try to close your trade, try to get out of the market. Don't try to keep the position open and stay in the market for as long as you can, because try to be patient and remember that all prices will be traded in the market. So yeah, Bitcoin broke out from 20K, but once it broke out, it went till 40, it came down till 30, went till 58, came down till 43, 61, 49, 65. After 65, it came down till 28. So all prices will be traded.
Yep.
Market will come back to your price just by knowing that all price will be traded, and just by knowing that market will eventually come back to your price at some point in time. You can be patient. There is no need to rush or jump or chase many prices, because see, this is almost a year-long range, and this 1 year, all prices between 20 to 70,000, 28 to 70,000 have been traded in around 365.
It's not timing the market, ladies and gentlemen. It's time in the market. Be patient.
Exactly. So it's a $40,000 range that has been traded. So you could have basically been patient, waited for a price to come back at whatever price you sold and whatever price you bought, and you could have made some sort of a profit always.
Always.
Yeah. So within this $40,000 range of price, even if you say, I'd say bought here, you get a chance to sell here twice. And even if it remains to be seen, but if this scenario plays out, if it comes back down again, even if you say sold here, panic sold here, or panic sold here in the 40s, low 40s, you might get a chance to buy back.
Nice. All right. That's mesmerizing. And we're way over time now, but I'd like to welcome all of you ladies and gentlemen that joined us today. What an amazing analysis with the Dpad panel. Thank you, Credible Crypto, Trading Star. This is your host, Riri, signing off. Have a good